The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the August 17th. Magnificent, well, it's not magnificent, it's a fantastic Friday show. The fantastic Friday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know I am absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in. Now it's just fine, 877-927-6648. If you can't dial in, we've got you covered. All you have to do is let those fingers do the walking. You can send me an email, steve@tfnn.com. Inside the subject heading, please put radio show question, and in the Tiger's Den, any ping will do. So let's go ahead and get this show started on fantastic, fabulous, Freaky Friday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to Lush Show. Right now, the Dow up 48 points, 25,607 is the print. S&P is flat, trading at 2841. NASDAQ is off 0.4. NASDAQ 100 down 0.4%. That's off 30 points, trading at 7343. Russell's up 2. Semis are off 14, a little over 1% to the downside. You've got the spot volatility index trading out at 1315. You know what that means? You do know what that means, don't you? It means right now it's trading below the 50-day exponential moving average. So we've got to go take a look at that. We'll do that here this morning. Gold is flat. Silver's down 9 cents. Light sweet crude up 11 pennies. Leading the charge dollar-wise to the upside, it is America's Car-Mart Inc. Up 13 bucks, 19%. Chipotle is up 9.60, nearly 2%. Nordstrom's up 6 bucks. Nettie's up 5. 5 and change. Intricon Corp. Up 7.5%, or 4 buckaroonies. To the downside, it is Tesla. It's off 28 bucks. That's nearly 8.5%. Google's off 16. Amazon down 14. ABIOMed, something along those lines. ABMD is the ticker symbol. She's trading about 3.5% to the downside, 13 bucks. So there's certainly movers and shakers. And there was a question. I was doing Larry's show yesterday and the day before. That would be Wednesday and Thursday. I know I can remember those dates out there. And then they were replayed yesterday afternoon. I did get a request yesterday at around 1 o'clock or so before my show re-aired, right? And the question was, and I don't recall the listener or viewer that sent in the email, but I do recall it was about Walmart. Now, this individual was in Walmart and was looking for a target price. And I believe in at a nice, healthy profit out here. So with regard to Walmart, we can see it's pulling back just a tad today. Right now, trading at 98.38. Huge gap. That is a huge sign of strength out there. Wide-ranging bar. Yesterday's bar is as wide-ranging as probably Walmart has had in a long time out here. In fact, if we could sort of measure it. Oh, come on, Steve-O, you can do better than that. But here's the last wide-ranging bar. This was a gap up back in November. Just kind of pull this over here and see if, just slightly larger than that sign of strength out there. Now, gaps are your friends. So we can see in the prior large gap, that is, we can see how what Walmart was doing. We're looking at a daily time frame chart. So that was a sign of strength. And then you saw many days, almost nearly, so this is for our trader out there, investor, If you go back to November 16th, when you had that sign of strength, that gap to the upside, price wasn't able to take out those highs, really, you'd have to say until January of 2018. So we're talking November 16th, and not really until January of 2018. I'm not saying the same thing is going to happen, but I am saying it's a possibility. If you take a look at where Walmart is going to run into perhaps a bit of resistance. It's kind of where it is in essence now. We would have anticipated, you would have expected that because Walmart had gapped to the downside, this is on the trading day of February 20th, so there's a number of gaps out here in Walmart. But on February 20th, no idea what was behind the news. We just know that there were 52 million shares that sold off to the downside. That, by the way, was pretty good volume. Pretty good volume we'll compare it to yesterday. Only 42 million shares to the upside. So what we can assume here, you and I can conclude, is that those folks that had bought Walmart, those shareholders on February 20th at about the we'll call it $95 area out there, they were probably feeling like, you know what, that wasn't such a good move when price got down around 81 bucks. And they probably made that deal with the trading gods. You know that deal. That deal goes like this. It says, I know I should have used a stop, but I didn't. I won't do that anymore as long as you let me get my money back. Yeah, you know that. You know somebody like that, and he's sitting right here in that chair that many, many years ago didn't know any better. You know, you'd wake up in the morning and you'd be holding a great stock. Back then it would have been like, I don't know, now we're in, would have been Red Hat, maybe. That was a Nutrisystems. That was a big Hanson Natural, a number of stocks like that. And that's what led me. That's how I got to where I am today. Because I got sick and tired of being a fundamentalist. I could take you around a balance sheet and an income statement and a cash flow statement like anybody. Well, like most professionals out there. And I could read I could write, and I have written MD&As for public companies. So I know all about the reporting stuff that's out there, but it still never answered the question. We report good numbers, and shareholders just sell the heck out of it. And you know, you've been there. Maybe you've been there. Maybe you haven't been there. I hope you have not been there. Well, you wake up the next day and you just took a 30% haircut. And for me, the question was, what was it that I was missing? That's really what led me to technical analysis. What should I know that I don't know? Because to me, that's how you learn, right? And so I sought out the best to do that. So I ran into Obi-Wan Kenobi. I mean, that is the exact truth out there. I couldn't read a stock chart for anything back in 2005, 2006. You know, you'd open up the Wall Street Journal, the IBD, you'd get to that section, you'd look at it, and it just looked like a foreign language out there. But I'm here to tell you that it's actually a lot easier than, but you just have to have individuals, which we have here at TFNN, that can take you through that process. Well, one of these processes, you know, what reading a stock chart is all about is measuring the emotion of buyers and sellers. The most fundamental thing. Look, with regard to Walmart, you're basically in an area here, even though it was a beautiful performance yesterday, it's eventually going to get back to its highs out here, I believe, but it could take a long, long time. So I don't know what your time frame horizon is out there. It still looks like a really good stock, but to a certain extent, it's really in a large consolidation. 82 bucks. I'd have to say up to at least 198. See Rhodes with TFNN. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Let's just make sure we wrap up Walmart there. So to answer your question, longer term, it looks like it wants to get back to its highs out here. If you look at the monthly time frame chart, it's made a 0.618 retracement. It did it with a wide-ranging bar. But when we take a look at that daily time frame, it really gives the bigger picture because you were going into a gap to the downside that had more volume. And so you had a number of folks that are just really very happy that Walmart did what it did yesterday. So it may take a while before Walmart makes its way back to the 109.98 level. So again, it just is all about your time frame horizon. Speaking of time frame horizons, as an example, our man Z inside the Tiger's Den posted something here asking a question. In essence, it says the NQ 30-minute chart made a seventh wave move to the downside, letter G, singing the key of G. Stevie Wonder out there. Is that a bottom or no? And so let's go take a look at it. So what he's referring to here is really a tool that helps you to also measure emotion. And that's in basically taking only the wave count. So this is not the Chapman wave. You need to subscribe to Basil's newsletter or go take his course in order to truly understand the Chapman wave. But a part of that is doing the wave counts. And a couple of tigers identified, Basil writes about it, the rogue wave out there. But a couple of folks, including John in the Tiger's Den, had noticed that I think it was Bob as well, but had noticed that when a market, whatever it is, an instrument, got to wave number 7, and we just labeled those on the charts out here, utilizing the Chapman wave method for labeling wave counts out here. When you get to wave number 7, oftentimes you see a change in trend. And lo and behold, I know John in the Den, he was paying very close attention to that. Whether it was long or short, either way, he was paying close attention to that. And during the trading hour, 30-minute, I should say, at 11 o'clock, when he had a confirmed 7th wave move, he had two choices. If he was short, I'm sure he was saying, okay, I'm going to adjust my stop or go ahead and take my profits. And he could have flipped to the long side out there. Now, the help that John would have loved to have had at that stage, if he didn't already, would be to understand where the TAS market profiles were. And the TAS market profiles on a 30-minute basis. So the question presented at 1:20 in the afternoon, was that a bottom? Was that the bottom, I suppose, is really the question. But what we know is that what we saw here with that seventh wave was a first move up to resistance. Anytime you get a topping or bottoming signal, the very first thing that you need to do, especially on that exact time frame chart, is identify where that support or resistance is. You know, I used to get caught up into, I love candlesticks, by the way, especially as they complete patterns out here. But I used to get all caught up in the old island top. And in the island top, the most bearish of reversal candles out there. But the reality is, it's just a signal. And you get that signal, it doesn't necessarily mean it's game over. It means, okay, price should now move down to support. And then you watch what happens at those levels of support. Well, here on the 30-minute time frame, John, price went right up to where it should have, the top of its 30-minute profile. I don't make this stuff up. I just post the chart out here. And you didn't know that at 11 o'clock, but you did know that at 11:30. And at 11:30, price went right to 73.7620. Now, look, maybe it was a couple of ticks, but it went right to resistance and stopped right there. And now all that it's doing, well, it's trading inside the range. And the range is 73.27 and 73.76. What I would say to you, and you already know this, if the seventh wave move doesn't get taken out, but we see a move above the top of that box, and the answer is maybe a bottom, at least on a 30-minute, or maybe setting up a Gartley buy pattern. Now, I don't know where that Gartley buy pattern, because I don't know if this is the low that we have seen just yet, but you know how to do that, and you home gamers, we'd love to be able to teach you how to do this as well. So is it a bottom? The way to answer that question really is going to be the end of day data out here. And so for the end of day data, what you and I will do is just simply expand our market profile prowess. I don't even know where that came from and whether that even makes sense, but I said it. And so here, in order to increase that prowess, that knowledge, right? Knowledge is power. What we can look at is multiple time frame sets of profiles. So we know what the 30-minute was. We have a 60-minute, that's on the left-hand side, left-hand panel, then a 2-hour, then a 5-hour, then a daily, and then a weekly. Really, to help us answer the question, potential question, was that a bottom, would be where does price close at the end of the contract session today in relationship to the bottom of its profile? The bottom of that box is 73.5988. It's called 73.60. We're trading at 73.56. If price closes below that, this will be the first time we see a close below a level of support on a daily basis. And then what I would say, John, is that no, that seventh wave move probably was not the bottom. Probably was not the bottom. Now, can you Steve, come on, can you give me something with a little bit more conviction behind it? I would say it wasn't the bottom. How about that? That's if price closes below that. Now, you out there might say, whoever you are, you might say, now how in the heck can you say that? And the reason I would say that is because there's still this topping signal inside the NQ on a daily basis. And daily's going to trump a 30-minute chart out here. And we haven't seen price close above Stevie's green line, green and red line out there, the oscillator and change line. That's priced at about 74.47. Which is like the top of the box out there. And so we happen to be in what could be, on a daily basis, a Tom DeMark setup 6 count. So I'd say pretty decent chance that price could move lower. Now, move lower to where? That's the biggie. That's the difficult thing inside the NQ out here. Because the figure, the value that I would give you is 69.67. But that's a long way down. You're at 73.55. 69.67 is what, another almost 400 points to the downside. And I'm not making that call. Not just yet. I just don't see it. Why don't you just see it, Steve? Remember how yesterday I said, basically when I'm talking to you, I really am talking to myself. I'm just carrying on a conversation with myself, which is why I like you to send me email questions or give me a call, because then I'm not so nuts in talking to myself. But the reason why I can't make that call that you close below the daily profile. We're headed down to 69.67. It's just simply because there's just too much money flowing into the U.S. markets. It's just that simple. Additionally, let's go check on what's going on inside the volatility index, spot volatility index. Does it apply to the NQ and the NASDAQ? No, it doesn't. But still, you know, and does the New York Stock Exchange apply to the NASDAQ? No, it doesn't. But these are really good tools. What do you mean really good tools? Take a look at the New York Stock Exchange right now. We could take a look at everything all on one screen out here. We're not really that interested in the New York Stock Exchange, even though it's trading at 12,871. What we are interested in is where is that advanced decline oscillator reading? And right now it is above zero. It's trading out at it's above zero. That is panel number 2 out here. And where I had anticipated earlier in this week that we would see a reading down around the minus 250 level, that's gone. Well, it depends on what today's close is. But you also have the spot volatility index, bottom panel. The 50-day line is 1334. We're trading at 1307. Those are bullish conditions if we get closes above the AD oscillator, level 0, above 0, and below the 50-day exponential moving average. For that reason, I can't say the ETF is headed down.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
TigerTV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. TigerTV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Let's go out to Seattle's best and speak with Tamar. Tamar, thanks for calling. Thanks for holding. First, should I pronounce your name properly?
Yes, you did.
Oh, perfect, perfect. Well, thanks for calling in. You want to take a look at J.P. Morgan? Tell us what you're doing, how I can help you.
Okay, so I'm trying to do an intraday trade on JPM, and I got in about the 1458 level, and I just thought it broke the gap from yesterday, and if it's, I'm kind of curious, it's probably going to go down now, but I was kind of curious if I should get out, hold on, or actually try to short it down this gap intraday.
So in the gap, what time frame chart is it that you use for your intraday trading for J.P. Morgan?
I kind of use a combination of probably anywhere from the 3-minute chart, 5-minute chart to a 30-minute chart. I just kind of I'll fluctuate between charts to just kind of get a broad sense of the price action.
Sure, sure. Okay, so just for the heck of it, on a 5-minute chart, we don't normally get this ultra short term, but hey, if that's what you use, and I want to assist you with that. And so I believe the gap that you're referring to is the one from yesterday at the open. And in this case here, that's where prices pulled back to. So the bottom of that gap, folks, the low of yesterday's session, in essence, was 114.30. Now, from just simply a volume metric standpoint, this should be where price finds support. The volume there was 298,000 shares. The last 5-minute bar, price pulled back was 62,000 shares. So the psychology here, Tamar, is that the traders who bought at the open yesterday, or during that first 5 minutes, they should still be around today. So to answer your question, should you go short? No, not yet. You'd have to see at least that level fail, and then we'd have to try to identify, okay, where could price head back to, which would really be perhaps the open or close, I should say, of the prior day. But we're 1:30 in the afternoon and it's on a Friday out there. I don't know that I would, and the broad markets are doing okay because we just took a look at the advanced decline oscillator inside the New York Stock Exchange. So being above zero is pretty healthy. The spot volatility index being below the 50-day is basically a healthy signal for the S&P 500. So it'd be very hard for me now, even though we're looking at just an individual stock. It would still be hard for me on a Friday afternoon to say, yeah, you should jump in on the short. But you took this as a trade to the long side, yes?
That's correct. Yeah, correct. I saw it penetrated the gap, and it's starting to bounce off at that level a little bit. That was I just got mixed signals from. Well, I was looking at the 1 hour and 2 hour charts too, all the way up to the 4 hour charts, and I just was getting mixed signals by it, and I couldn't tell where it was going. But I was going long for the day initially.
Okay. So, it doesn't look like – so on the 5-minute chart, even though prices come back to support, there's nothing here to suggest to me at this stage here that prices are going to get up to even 114.65. But prices at support. And so, I don't know your trading style, but 114.30 has held. So, probably what you would do, because you're considering bailing to a certain extent, is having your stop somewhere below the 114.30 level. And so do the math on your risk reward tolerance and so forth. I would do the math that way. That's what I see when I look at a 30-minute time frame. You had mentioned that too. Again, it's trading below the bottom of a market profile that should have held as support. That's right around 114.49. So intraday-wise, I wouldn't bail just yet because prices come back to support. I'd give it just a tad bit of room.
Okay. And is it possible, do you ever see that where stocks will actually maybe break the gap but then pop back up, or normally once it breaks that gap, it just is all down there? Or is that based on volume if it starts going to fill the gap?
No, it's funny that you say that. The answer is yes. Do you like watching movies at all?
Yeah.
Yeah. Did you ever see the one, it's the something blonde, the girl who becomes an attorney? What's that?
Legally Blonde.
Legally Blonde, right? In that movie, there's she tries to teach her hairdresser the pop and snap or something like that. So when you ask me that question, have I seen something, break through in essence a gap or level of support and pop back up? I think of that scene inside the movie. And yes, and if you do see that, the problem is when you have a gap like this, you're just never certain. Is it just going to go down and tag the high, in this case here, the 113.90 area, or is it, and where is it going to stop? Which is why I like to use the average true range of an instrument, you know, as a guideline, even if it's a 30-minute time frame chart or something like that, to assist me. So I've been looking at the thousands and thousands of charts. I've pretty much seen everything out there and recognize that technical analysis is a great tool. It's not a perfect tool. All right.
Yep.
Does that help you? Okay. Hey, tomorrow, you bet. Thanks, and best of luck with the trade. Thanks so much for calling. Let's go out to John in Philly. John, thanks for calling. Thanks for holding. How are you? Do we have John?
Hello?
Yes. John, you there? I don't know who. Do we? I'll let the control room figure that out. Give me the high sign when we've got John in Philly. That would be great. And I know that he is calling about ticker symbol, so I'll get this thing fired up here, and hopefully we've got that all set. CQQQ and CQQQ, Invesco China Technology ETF. So this is kind of interesting out here. So I'm going to guess that John is searching for a bottom. John, do we have you yet? The answer is no. I hate when technology. He's calling about technology, and that technology is not working out here. But we'll get that figured out. So let's go take a look at what do we want to take a look at out here. You know, they talk a lot about sector. Not they. Who's they? Who is the they? But many people are talking about the sector rotation. And I'm assuming inside the S&P 500. You know, one of the tools that I have developed for subscribers out here, this is my black box system. We call this Bob because in an instance you know whether an instrument is bullish or bearish. And John is back online. Let's go straight to John in Philly. John, thanks for holding. Thanks for calling back or whatever you needed to do.
Steve-O, thanks for taking the call. Can you hear me?
I can, just fine. Loud and clear.
Oh. Very, very good. My call got dropped. Steve, I wanted to ask if you could help me look into the ETF. It's run by Guggenheim. Ticker symbol is CQQQ. Steve, that is the ETF with everything China Internet related. So the big weightings in that ETF are Alibaba, Tencent, Baidu. Those three comprise 30% of the fund's assets, and then there's a bunch of others that are in related businesses. And, Steve, you know me, I'm a guy who looks to find and then capitalize upon intermediate-term moves. So looking to buy into intermediate-term declines that have the potential to bottom and then go higher, or intermediate-term rallies that have the potential to top, turn, and go lower. Now, here in the case of CQQQ and the China Internet...
Hey, John, we're just about to go to break. John, can you hold that thought and come back and share that with our audience out there?
My apologies. Sure can.
No problem. So we'll be back with John. We're going to take a look at the Invesco China Technology ETF out there, CQQQ. We'll be right back, folks.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. We're on the line with John in Philadelphia. We're taking a look at the China Technology ETF out there. The ticker symbol is CQQQ. So, John, sorry about that. The ad, as we were going off the air, cut you off. So if you could go ahead and complete your thought out there, and then I'll give you my 2 cents worth.
Yes, thank you, Steve. So here's my hypothesis. The CQQQ ETF, China Internet Stocks, has declined from 67 down to 46. It's just about to test the Fibonacci 618 support mark at 44. Now, this is a big percentage decline of that preceding 2-year rally. China is a massively large country with technology rivaling that of the U.S., and everything inside CQQQ is akin to, Facebook, Amazon, Google, etc. So, so I'm attracted to coming in and at least looking for a tradable low, potentially the end of an intermediate term decline. That's what I'm looking at, and the reasons why. It's currently 47. You could conceivably buy it at 47 and say, well, I'll hold it unless it gets under 44, the FIB 618. So that's a trade idea. I haven't yet acted upon it. Mm-hmm. Could you share with me what your chart work tells you about that idea, please?
I would have one question for you because you spent some time analyzing this and taking this into consideration. And the question would be, would you take into consideration the Chinese yuan and what it is doing into your equation?
Well, you obviously have to, sure. You're buying Chinese equities denominated in their currencies, but, you've got a complication with facts such as Alibaba being primarily listed in the United States, of all places, of course.
Sure.
So, of course, you do have to factor that in. So you're essentially buying currency risk as well as commodity risk, equity risk. But I choose not to say, well, I'm going to buy the ETF, the equity ETF, trading off the currency. I don't want to do that because the power of the businesses and 1 billion people can overwhelm, currency issues in time.
Sure. And what I want to do is, in part of asking the question was for all the other listeners that are out there that are
all just dropped.
Oh, no, you're there. I think we're good. But John, so the reason why I wanted to ask that question of John, if he's back, that'd be great. But it's just simply because I know so many other listeners out there that are going to go ahead and investigate this as well. So what I have on my screen for everybody is I have at the top of this chart here is the CQQQ, the Invesco China Technology ETF out there. And just below that happens to be the U.S. dollar, Chinese yuan currency pair. So what we can see here is just visually you can see a fairly decent correlation out here, directional correlation. That's actually the bottom tool on my screen is the correlation tool. Now I have the setting here at 10 days, so it's using a 10-day average. When bars are above 0, tells you that directionally things are correlated. When the bars are below 0, it tells you that there's an inverse correlation. But the majority of these bars out here over a 10-day period are above 0 out here. So I do think that the factor of the Chinese yuan needs to be taken into consideration in taking a look at this trade specifically. The question is the Chinese yuan, is China done devaluing the currency out there? And it's been a purposeful devaluation, period, end of story. It just is. And it's the way for China to be able to combat tariffs. It's the way that all countries, including this country, deals with tariffs and taxes and other things that are out there. It's always about the currency. It's always about the global flow of cash. Now, the answer here, the Chinese yuan has basically gotten back to the lows in December of 2016. It didn't take long to get there. It took from December 2016 to March of 2018 in order to make one move, and then it just simply was able to, as the whole tariff thing, this was how they were going to combat it. So it does look like, so John's hypothesis that maybe this is a good investment, the currency itself has made a 100% move of a move. So what's nice is John is saying, hey, you know what? It's worth a risk because these are big companies out there representing 1 billion people, and you just have to put your stop below the low of a couple of days ago. And from a currency standpoint, you've made in essence a 100% move of a move out there. So I see what you're looking at, and I can't find any reason here not to. Other than, not to take that trade, by the way, other than to say, if the currency starts to get devalued even further, then what you're likely to see as this trade would not pan out. So thanks for calling. Sorry for the whatever telephone issues were occurring out there. Let's go to Mike in Ormond Beach. Mike, thanks for calling. Thanks for holding. How are you today?
Steve, I'm doing great. Hey, Steve, I'm looking at Pan American Silver on a weekly chart.
Okay.
And as of right now, on my chart, it looks like we're hanging right at the 200-week exponential moving average. And it looks like that has been areas of support earlier this year, like from January to March. So I was wondering what your thoughts on that were. As of now, I don't see any big bullish candle to show that we're doing a reversal and moving up. But what are your thoughts? Do you think this might be an area where it could be starting to form a bottom?
Well, I wish I had Garo on the line with us because he is the moving. Of course, he uses the simple moving averages. He is the moving average expert. He's a connoisseur of it, where I'm not. Now, I've put the 200 out here for us, and, prices, as you said, is trading right on it. I think that now is not the time to buy Pan American Silver, but let's try to go prove the point out here. I'm going to turn that moving average line off my screen. What I'm noticing is, and it's on a weekly basis. We're going to start with the weekly basis out here, Mike, and this week volume is pushing lower with 8.2 million shares. It is not far away from the swing point that was established in Pan American Silver from back in December 2017. Hasn't gotten there yet, but it's 14.98. It's close enough where it should go and at least test that level. Now, that swing point only had 5.4 million shares out there. There's another swing point that had 19 million shares if you go back to November 2016. So maybe your point is that you're starting to get into an area inside outside of Pan American Silver on a weekly basis where you can argue that there is decent support. Is it here right now? Well, if we go take a look at the daily time frame out here for that, let's say, a bullish reversal signal, we don't have it today. And so therefore, this was moving on a daily basis into a swing point from February 9th that had 2.6 million shares, and it did it yesterday with 1.9. Now, that's pretty cool that you've got that out there. But if we're going to see a reversal, you'd like to see some type of bullish reversal candle. We're about to go to break, Mike, and I don't know that I'm done, and you may have another question. So would you be kind enough to hold on through that break?
Sure would, Steve.
Okay, so we'll come back. We're going to go ahead and take a look at Pan American Silver with Mike in Ormond Beach. And during that break, we'll see if there's anything else I can figure out to assist Mike with that trade. We'll be right back.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's TigerTV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
We're on the line with Mike in Ormond Beach. We're taking a look at Pan American Silver. Ticker symbol there is PAAS. So, Mike, during the break, what I put up on what's on the screen right now is the correlation, directional correlation between Pan American Silver and the silver contract itself. Now, it's a continuous contract that is up on the screen. Again, all those red bars above zero say there's a directional correlation. Now, I've used a 5-day period here, so it's a kind of a real short correlation period, but you can see, you know, and we didn't necessarily need to do this to prove that point, but it's always good to prove the point, you know, have a set of facts out here. So what you really want to see before also taking a long in Pan American Silver is some sign of a bottom inside of silver, and I don't see it just yet.
Okay.
If I put this chart up on my screen, this is a daily chart for silver. We're just really trading inside of the bar from a couple of days ago. In order for silver to, I can't guarantee that it hasn't bottomed. I just don't see it. Whether I look at market profiles or anything, if silver's bottom, it's going to close above this little red squiggly line on my screen out here. Slightly different than what I use typically, and that is at $15.08. Otherwise, that's resistance out here. But at this stage of the game, I think it's best for you to see if Pan American Silver can move down towards that weekly swing point area in that 14.98 before you would get in the trade, or wait to see some type of other bullish signal inside of silver to give you some type of bottom out there. That's my current thinking.
Yeah, well, like I said, Steve, I was observing a couple different things, and it's just an observation that I made that it's possible we could be getting, possibly forming a bottom, and I'm just kind of looking, making my little list up possibilities. So
absolutely. What we're not seeing just yet, Mike, just to finish this off as we go off the air here, with regard to gold, I'm not seeing buyers from across the globe buy into a bottom for gold just yet either. So they probably aren't for silver. Hey, thanks for calling. Much appreciated. Have a great weekend, folks. Thanks for staying. Thanks for joining me this week, and we'll have a great weekend, safe weekend, and we'll look forward to seeing you on Magnificent Monday. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.